Good day, everybody. It's Dr. K coming at you from London, and of course Gil Morales from Playa del Rey. And we see here a market that just has been going sideways for the last couple of weeks because we've got, on the one hand, these issues out of some of the dominoes like Cyprus and Italy that keep a lid on the market, and then at the same time we've got quantitative easing that is keeping a floor on the market. So we're also seeing pre-holiday volume being quite light, which is a natural tendency. And so the question will be which way this resolves. Based on the uptrend, technical analysis says we should resolve to the upside. And volume figures have been light, but again, that is they've been light all year, and primarily because we've got a situation where QE is pushing the market higher in a lackluster manner, and without any seriously negative news, the market drifts higher. And then when we do get some what's perceived as seriously negative news, we see action like we saw in mid-February with the market coming off, with the major averages almost hitting their 50-day moving averages. Actually, that NASDAQ did bounce off its 50-day and then once again moving higher, faking everyone out simply because the price volume action in mid-February was quite negative, and there were a string of distribution days. Three out of 4 days were distribution days as the market headed toward its 50-day moving average, making virtually everyone think that we're in for some sort of correction. But nevertheless, QE was to the rescue, and the markets bounced and went to new highs. So it'll be interesting going forward. As always, I could mention also the precious metals with silver and gold. Both of those, silver had a pocket pivot in yesterday's trade. It closed just slightly down, less than 0.1%, but that type of action where it closes basically the top of its trading range on higher volume is positive. The issue, of course, is that these precious metals ETFs are in these within the base downtrends. So that poses additional risk to buying either of these here, which could be premature. On the other hand, we've got the bottom of these bases, which act as support for both of these metals, as we saw GLD in mid-February test its lows, where it came almost down to 150, and then promptly got support. So basically, these are still fairly much in no man's land as they continue to trace out their basing patterns. Gil?
Yeah, I'm just trying to stay awake over here, on a Thursday before a long weekend, and it's really not a lot going on. Even though the indexes, look like they're basing and like they want to go higher, and maybe they do, it's not that easy finding stocks necessarily that are ripping to the upside, and you can easily get caught in stocks that suddenly rip to the downside, as we've seen with, well, let's see, I'm using the wrong chart here. Let me get rid of this one. Go to my handy-dandy daily chart here, such as, the mortgage stocks I was talking about last week, how they had come apart, and you notice here's your rally right into the 50-day, so this becomes a potential short sale candidate. Nation Star Mortgage, Aquin Financial, not as high up in its pattern, and you might think that you should go after NSM because if you wanted to short them, because it's at its 50-day moving average, and OCN is not, but actually OCN not being able to rally up to the line might indicate it's weaker. But keeping an eye on these, I think there's a bifurcated market here where there are some situations that become shortable for a period of time. You guys know I was shorting Facebook for a while, but notice how you broke down, you undercut this low here, and the 200-day moving average, so it set up this rally back up, and now the stock's kind of hanging out along the 200-day line. But kind of watching this, I'd like to see a rally potentially to short into, but I still think Facebook over the longer term is going lower. Now on the long side, well actually no, wait, let's go through a few more of these. Remember last week I was talking about how you got to watch for other groups in the housing related sector potentially coming apart, because we did see this Lennar, had a huge powerful breakout, and I think this is one of the problems with the market in terms of playing individual stocks, is that you'll see these powerful breakouts, that was one, Lennar was one, Commvault, and they really don't go anywhere, and I think that's an issue. But specifically in the case of the housing-related stocks, you've got Lennar, you've got Pulte Home pulling back after looking strong. I think Ryland's the only one right now that's holding up. But what I told you guys to watch out for, given that we had seen the mortgage stocks roll over and break down over the last couple of weeks, now we're just getting what I think is just a normal sort of reaction rally here, or reaction bounce after undercutting this low. To watch for other groups in the sector that might be breaking down. And of course, we saw U.S. gypsum got nailed on Monday, and a huge volume break. Notice how it's undercutting the lows in here, and so that sets up a potential rally. But this stock looks like it may go lower and head towards the 200-day moving average. So I'm actually looking at this now as a late-stage failed base, given that you have had a long run, and potentially as a short sale. I don't know if it holds at resistance here and isn't able to go back above the 27 level, but I'd be looking for the next spot might potentially be the 200-day line. Maybe it undercuts this low or this low here and then bounces off the 200-day line. So there are areas and pockets of weakness amidst all the so-called strength in the indexes, and a lot of stocks that are breaking out really aren't going anywhere. And I think that's problematic. I mean, one of the better names we've seen, we have a small position in, but it's not like it's going anywhere. Splunk broke out, but I think one of the problems here is that, you know, we talked about this pocket pivot. The next day, of course, it gets smacked on about equal volume right back to the 10-day line, but it held, and it's drifted back up to the highs on light volume. But one of the issues here may be that this is, notice there are no down weeks here. So you're trying to form a handle. I'm sorry, you got, I think, one down week, and then you kind of drift a little bit higher. But you got this handle that's about 3 weeks long. This is a 34% deep cup. It may need more time. It reminds you a little bit of Cisco Systems in 1994, which had formed a similarly deep cup. And then I thought, you know, after about 3 or 4 weeks, I tried buying it on a breakout, and then it came back in. And I did that a couple of times, buying it along the handle, and never went anywhere. And then 13 weeks later, it finally did break out in 95, I believe it was, and then took off. And this may be a similar situation to Cisco in 94 in terms of it being a deep cup. It needs more time to form a handle. But it's a little bit slow out of the gate, but one of the better acting names. We've seen also LinkedIn is holding up okay. If you look at it here, it's just trying to form a little base here, and it probably needs to form a base. Again, you had a pocket pivot here, but I think by this time here's your initial buy point. Here's your continuation pocket pivot. Here's another one that failed. Is that right? Was that, no, that was not another one. This one was one that failed, and so it's getting a little bit long in the tooth here, so it probably needs to build a base. But that's one of your better names that's been holding up. Netflix was another one we had mentioned, the pocket pivot, a couple of days ago. Now notice it's holding tight along the closing price of the pocket pivot on Wednesday, or rather Tuesday. So I'm thinking today's Friday, but it's only Thursday. And you can see that you're trying to hold up in here, and it runs into some resistance at the peak. Netflix is at a high type flag. All I know right now is a 1, 2, 3, 4, 5, 6-week base. That's all I know for sure. You're getting some decent closes along the 10-week line. Notice how the 10-week line is providing support for the stock around the lows at the 180 level. So this may have a chance to go higher, but it's a little bit slow out of the gate on the heels of Tuesday's pocket pivot. So, you know, some of the things that look okay. Celgene is another one we own, and it's moving higher and not really getting any pocket pivot volume, but it's making a new high here, and that's acting pretty well. Another one is Santaris, which is just holding up and doing okay. So, you know, nothing terribly exciting in here, but I think that you know, some of the better stocks are trying to base, and maybe if the market goes sideways for a period of time, you start to see some rotation and things pick up again, assuming the market doesn't want to top, which it certainly hasn't shown any willingness to do, given the fact that it's had excuses and it has not broken down. I mean, every time you've seen the market get hit with you know, on the downside, you see it closing in the upper part of its range like it did yesterday and in prior days over the past couple of weeks. So you're kind of in you know, a mushy, swampy sort of zone here, and I'm a little skeptical as to what the market can do right now, although you could continue to have the index rally, or the indexes rally, or as Dr. K likes, is that indices, Dr. K? So is that the British pronunciation, indices?
No, I've actually always heard both interchangeably from the States.
Right. So I like indexes, you like indices. I say tomato, you say tomato. Okay, I'm into it. Anyways, So let's see, what else is going on here that gets my blood boiling? Well, looking around, not too much. You got Krispy Kreme has been hanging in there, trying to build a base. You can see in here now get some support off the lows 3 weeks ago and basically going sideways, so that's still holding on its base. I've been watching some of the financials, like Goldman Sachs is now below its 50-day moving average. Now, Dr. K, would you consider this a 50-day violation here, given that you flipped out underneath the low of
that would be,
days ago?
yeah, that would be a standard 50-day violation.
So now with it drifting up higher up into the 50-day moving average, you'd be a seller?
Yeah.
Okay. Yeah, I think that makes sense to me. Maybe even this thing's going to roll over. I don't know. You know, some people have talked about with the Cyprus situation that it just indicates that U.S. banks should be safer havens, but you notice that Goldman Sachs, J.P. Morgan are not really doing much. In fact, J.P. Morgan today is issuing a sell signal as it violates the 50-day moving average. So you know, slushy and mushy. There's some things going up, some things breaking down. I think probably we should do is just start answering questions. So we got off to a little bit of a late start, mainly because we were dealing with a couple other issues before the webinar this morning. So even though it's a slow market day, in terms of general business issues for us, it's always a busy day. I'm going to start with the first question, which I think is interesting. But I think it's indicative of how people want to look at the market or look at techniques in the market as being this sort of black and white, calculable sort of algorithm that you use every time you're trying to take a position in a stock. So the question is, last week you discussed how Bill O'Neill was quick to change when wrong but knew how to load it up when right. Trading coach Van Tharp says position sizing is the most important variable to determine portfolio results. Well, that's true. And even O'Neill says the way to make big money is to concentrate in a few big leaders. So yes. Could you discuss position sizing and how to load it up, especially if starting with a probing position? I think if you read our latest book, and I'm trying to remember what chapter is that, Dr. K, where we actually show how we handled the AGQ, is that the 2X silver ETF back in 2011? And I think that was, trying to remember the chapter there. Can you refresh my memory, Dr. K?
Sorry, come back again?
What was the chapter where we talked about how we handled a AGQ position? I think it's chapter. Hold on. I probably got 10 people IMing me. Chapter 3, 2011, a post-mortem for the new millennium. Basically, a fancy way of saying that we went over our trades for 2011 right there. So you can actually read that and get an idea. But you know, a lot of times I'm just operating instinctively. If I smell something and I think that I'm willing to take the risk, and I smell, say, the fact that I think, you know, LinkedIn is going to have a whopping earnings report. Now, of course, there's risk, and I could get slammed on it too. I'll just load the boat and go all in, and that's been the way that I've frequently traded in the past when I made big money. Going short in May of 2010, when I was up almost 80% in one single month, I just got heavy short on these bounces up. There were some rallies, I believe, in late April, early May that were shortable. I remember, I believe, U.S. Steel was one of them, and I just instinctively do it. I'm not looking at some algorithm or pulling out my calculator to figure out what size position I'm going to take. If I see something I like, I generally just go for it. Try to keep a reasonably tight stop in case it works against me, and just operate on that basis. So there's not really a lot of thought, but I think if you want to get an understanding of how we were rapidly able to build a pretty big position in the AGQ, the two times leveraged silver ETF in 2011, to actually, we were up, I think, in 1 month 55% with that thing alone, which shows how quickly you can get things going. But you have to have something that's trending in your favor, and in that case, as we all recall, silver had a wonderful move. Let's go back. And for those of you guys who are following me on Fox Business News, when silver was around 28 and Stuart Varney was beating on me, you know, as to where it's going to go, and that somehow I was an evil person if I couldn't tell him exactly where it was going to go, and I just blurted out $50, and that's pretty much where it got to. But you know, this was the trend that you got, so it's a very nice, playable trend. And so you can read in the book, we're very clear about it. and see exactly how we were able to build our position. So, that I think is your best source in understanding that. Somebody says, anybody talking? See the screen, no audio. No, sometimes before we start, we put up the screen, and when we come on, we turn on the mics and everything and start the webinar. So don't worry about that. Thoughts on Commvault? Why do we need to have any thoughts? Again, this is a type of question that implies that somebody has something to think about a stock when it's issuing no other buy signals other than this breakout. So what do you ask yourself? If you have a breakout here and the breakout level is, say, I'm going to say, what do you say the breakout level here is on this stock? 79.80? So 5% of that would be, 82, 83. You're trading right now at 81.99. Are you within range of the breakout? Well, yes. So it's in a viable range. I mean, that's a very cut and dried way to assess the stock or to think about it. But there's really, I want you guys, for those of you who still are prone to this, wanting to hear our thoughts about something. I don't get up in the morning and muse over what stocks are doing or what I think about something. I just look at what the price volume action is telling you, and one of the things that we try to emphasize on our website is empowering you guys to make those sorts of judgments and assessments on your own, and hopefully move away from relying on what our thoughts are, because there's really not too much outside of the fact that you had a breakout, you're pulling within range of the breakout point, so it is viable. Now, let's look at this, continue to look at this objectively. What would cause us to see a strength, sort of a signal of strength and a viable, actionable point here? Essentially, if you're running along the 10-day moving average, this sets up the potential for a pocket pivot along the 10-day moving average. So that's something to keep an eye on. So what you might want to do then is, looking back on the chart, let's make the volume bars really big here. Looking back on the chart, you can see that the highest volume over the prior 10 days on the downside is this day here, which is 1, 2, 3, 4, 5. It's exactly 10 days ago. Well, if you count today, it's at 9 days ago. So it would have to exceed 880. Looking at my little readout over here on this side, I can see that would be 880,529 shares. So if you set an alert for that today, then, and tomorrow, I believe, or Monday, then that came up off the 10-day moving average, that would be a pocket pivot. And as you progress further, I think then you'll have these 2 days will come into play. This day comes into play over the next couple of days as the highest down volume within the last 10 days. So that's basically what you would be doing here with the stock. But the fact that it's within 5% of the buy point puts it in viable range. Okay. SourceFire is stock just coming up out of this big double bottom pattern and forming a nice tight little flag. So it's holding on in there. You'd need to see it exceed this volume of let's see, 1, 2, 3, 4, 5,
1,057,000.
What, on SourceFire?
Yeah.
Which day is that?
That would be the 19th.
I'm looking at the 19th on this chart, and it's showing me 626,000.
Oh, sorry, 626,200. Yeah, yeah.
Okay.
Now, Wanda,
you freaked me out there, Dr. Phil. I was thinking maybe I was looking at something
that's all
wrong.
good.
But in any case, that would be, you'd want to see it exceed that volume for a pocket pivot. But, holding up in a nice tight pattern in here, like a nice flag pattern. Now, understand that you're straight up off the bottom here, so you might need to go tight sideways for a little bit longer. So, and this is the type of thing I'm talking about. If the market's going to go higher, then I see more situations cropping up like this, because we've seen a number of them just go, poop out on us, and it's a little bit disconcerting. And if you're in the wrong names, that can kind of offset the things that have been working well. And I know a number of us, we were all in Coors, Michael Coors, and we got smacked around after they came out and put out their secondary offering. Now this thing's below the 50-day. I don't know. It may become shortable in here up into the 50-day moving average. The other aspect here may be that it's rounding out a base, and you notice here you have some heavy volume 3 weeks ago, but it closes in the upper half. So it's trying to get some support along the low. So this is not really clear to me. If it were to get up above the 50-day, then it may start to turn. That's a possibility. We saw that happen with NSM earlier, where you had the Bible gap up here, and then the thing just kind of flipped out and moved to the downside and then turned and made a new high before breaking up again. How does QE make the market go higher? Isn't it just bond buying? Dr. K, that's one for you.
Yeah, it's just basically you have these POMO days, these open market days where the Fed is essentially printing money, and that money has to go. You know, they buy the bonds because they want to keep the interest rates low, and they buy the bonds with money they printed, and so that money has to go somewhere. And you know, the more money you print, the more places the money has to find itself, and so the money tends to work its way into stocks. Of course, if we start to see bonds being a better investment, say, you know, 2 years from now, then we'll see money moving away from stocks and into bonds. You know, it's just, but the money has to find somewhere, and sometimes, you know, the money doesn't really go anywhere. It's the intention of printing money is to get the economies rolling so that new upstarts and small cap companies can get the right loans and get the right cash infusion so they can develop their services and products. But that hasn't been happening because the world is nervous, and people are nervous, and people tend to actually hoard their cash, their savings, because they're not seeing viable investments out there, or at least investments in which they want to risk their precious capital. So the economy has been very slow to recover. I would argue that not only are the UK and in most of Europe in recession, but so is the US. If it weren't for all these shadow statistics, the non-shadow statistics, I should say, the government statistics that are fairly well doctored. So you got these exaggerated claims based on what the U.S. government is saying. Meanwhile, the U.S. is actually caught in recession just as well. And if you look at recessionary periods going back 150 years, I have a chart in one of my books, you'll see that major countries that are leading the world, when one catches a cold, the others also catch cold. Everyone catches the fever. And so recessionary periods tend to correlate very highly among leading countries. So I don't see why today should be any different if it weren't for the manipulation of governmental data. Gil? Oh, you stepped away. I can also say that in terms of this manipulation, I mean, you just have to look. You don't have to look far to see that things are not good in the UK or in much of Europe. And if you look in the US, you'll see the same effect. You'll see basically a mirror effect, that a lot of people out there are struggling, and that unemployment is actually quite a bit higher. The shadow statistics claim that unemployment's well above 20%, as opposed to the 7.8% claim by the U.S. government. Gil? Oh, it looks like Gil's mic has died. All right, I'm going to see what he wants to do because he's got control of the panel. Just waiting to hear back from Gil. I think he's probably finding a new mic. Stand by, everybody.
Can you hear me?
Oh, there we go.
Okay, I'm not sure what happened there, but I had to unplug and replug in my microphone. But you hear me okay now?
Yeah, it's usually software driven. If especially if you haven't rebooted in a while, it could happen.
who knows? Windows machines, they suck. Anyways, what was I saying? Yeah, you were talking about the economic numbers
Shadow
and
statistics.
right, and in shadowstats.com, if anybody's ever gone to that website, they're actually showing that we're closer to negative 2% GDP growth. So a lot of this is manufactured, it seems like, and so maybe we are actually in a recession, but it seems like QE continues to drive the market higher. And another interesting factoid to know is that the government, the Fed, is basically lending money to banks at 0% and then paying them 2 to 3% interest. So that's a pretty good risk-free return for them, but it's pretty much a scandal as far as I'm concerned. But when these companies are awash with the money that they're getting at 0%, and it's hard to make big money on it, then I think that you'll see some of that flow into the market. Anyways, let's get back on track. Somebody says, when you worked for O'Neill, you advised them on potential purchases and perhaps stocks to lighten up on. How did they look at the technicals and think about where to enter as opposed to the style of hedge fund traders, which I assume is more proactive to price action? The big institutions, what they would do is simply look at a chart and show you the bottom of a base and tell you those are their footprints. So they didn't really pay a lot of attention to charts or technicals, and they were often very skeptical because the reality of O'Neill investing, and this is where the big contradiction I always thought in terms of advising institutions, is that when you're looking at a weekly chart of a stock and you're seeing tightness or accumulation in the base and supporting weeks and all that, those are the actions of the institutional buyers. So they're not keying their action to and decision making to the actual price volume action of the chart. They're actually looking at the fundamentals and buying the stock on that basis primarily. And if you think about it, somebody has to create those bottoms in the bases, and that's what they're doing. So they don't really look at any of that. Is iSurge a possible short? Someone asks. I mean, you can look at it as a breakdown. It's very news-oriented right now, so it's trying to set up and probably move higher. You'd have to look at it, I think, rallying up to the 200-day at 522 or the 50-day. So, eGov, someone's asking about. I think it's a pretty thin stock. It trades at what, a couple 100,000 a day. What is this?
Yeah, it's a thinner stock, and it's had an earnings defect in the 2 quarters ago.
Yes, but it's moving higher, so it's got 62% earnings growth in the most recent quarter. I don't know. There's no buy points in it right now, so there's not really much to say about it. Please comment on China, FXI. Well, China's in a correction, and you can see here the FXI is along the 200-day moving average. So, I don't know. This is what it looks like on a weekly chart. So it's a pretty decent correction of about, what is it, 20%? No, that's about 15% correction so far, roughly. So that's really all that's going on. You got anything else to say about China?
That's it's slowed down a bit like the rest of the world. It's affected by the recession, obviously, in the U.S., U.K., and Europe. So it's going to slow down as a result. And for China, slowing down means not growing at 9% a quarter, but only growing at 6%. So nevertheless, again, these markets tend to move hand in hand. There's a high level of correlation in the price of these indices, whether you're looking at China, India, Russia, Brazil. They all have some general correlation, and then the correlation increases when you're looking between, say, Europe, UK, and US. So, for now, China is going to be in its throes of a slowdown, and we'll just have to wait for it to finish out its base. But this is true with many other countries at this time.
Comments on Apple. I mean, Apple had a gap down yesterday, and it's rolling over. So you notice it just gets above the 50-day moving average, which is not atypical for a stock like this. And now you're rolling over. You're not seeing a lot of heavy selling. I'm guessing what you're seeing is end of the quarter dumping of the stock, and people don't want to show it in their books or on their books, and so they're just taking out the position and sending it lower. And nobody's really stepping in to buy it. But you can see here on the weekly chart, you basically are still in a downtrend, and if you're not able to hold above the 50-day moving average, then of course this looks like it is shortable, moving to the downside, and using the 50-day moving average at 455, about 2% higher as a potential stop on the upside if you wanted to come after it here. But the thing is, you're not seeing a lot of heavy volume on the sell side, and if the buyers get excited because they think Apple's going to do something with their capital in order to shore up their stock price, you know, that always has the potential to get things rolling to the upside as it did the last couple of weeks. You can see the big volume spikes and everybody comes running in because everybody just wants to see a turnaround in Apple, which really hasn't been happening. XONE or X1, I guess, is another of the 3D stocks. Somebody's saying does not compete with other 3D companies, reported positive EPS today, long. Well, you're getting a little bit of a pocket pivot in a sort of a V-shaped pattern here. So what do you think, Dr. K?
Yeah, this one is, I saw this one come up in one of my screens, but the problem is that it's really too thin. Not really interested in the industry group. The earnings and sales are looking great, but it's just too thin for this this kind of market environment we're in. So I'm not interested.
Yeah. And this is a V-shaped pocket pivot. It's going straight down and then pocketing straight up to new highs. So,
although, well, in that case, it's reaching new highs and it's an IPO, so I would forgive that V shape as opposed to more well-established stuff.
That's what you look like on a weekly chart, though. So there's really there's a big deep V-shaped cup. There's no real handle in here yet, so it might be premature. It may need to put in some time at best. But I guess it's looking pretty good, and it kind of reminds me of Proto Labs, which is hanging out and trying to act constructively. It's a little choppy here. No pocket pivot, though. You don't see any volume here that would constitute a pocket pivot. But the stock is building a base here, 1, 2, 3, 4, 5, 6 weeks now, and it's holding the 10-week line. So it seems to be acting relatively constructive at this point in time. So that's maybe that is more similar to X1. I guess that's how you pronounce it, right? It's not Xone, but X1. So it may be viable. It's possible. So I know one thing for certain: the Triple D is kind of dead in the water, and Stratasys is trying to rebuild, but these things are way off their highs and looking pretty ugly. LinkedIn, did it violate its 10-day moving average last week? Actually, it hasn't violated the 10-day moving average. There's your first close right there. Make it nice and big so everybody can see it. There's your first close right there, but you never move below the intraday low of that day. So even here, you close below, but you never move below the intraday low of that day. So it hasn't even violated the 10-day, but I think as Dr. K has pointed out before, you're not using that as your selling guide for the stock. Is that correct, Dr. K?
That would be correct.
Somebody asked, some seem upset at the government's going after uninsured deposits. If we want strong banks, should they not punish investors in weak banks that turn insolvent? I think that my general view is that banks should be more transparent than they are, and I don't think there should be any FDIC insurance, depository insurance for any accounts, and people should be forced to look at a bank and understand whether the bank is solvent or not, and decide whether or not they want to place their money there. I don't think that government should be there to bail out depositors and banks that are mismanaged. So I think anything that contributes to holding banks' feet to the fire in terms of being well managed and making sure they're well capitalized is ultimately the best thing for any depositor. So I guess I feel that they should punish the investors in the weak banks, and even depositors should not. I don't think that there should be any deposit insurance myself. That's my own view, and that's similar to what Peter Schiff thinks as well, because what it does is it creates a moral hazard. I mean, if you just blindly put your money in a bank and you know that the government's going to cover you for up to $100,000 or $250,000, I think it was recently, that kind of distorts the system, and it also lets banks be a little bit lax. I think what we need to do is go back to a system where banks are more accountable and more transparent in terms of their capital ratios, so that depositors can assess whether that's a bank they want to put their money into. And I think that's where the whole system has gone awry, really. So do you have any comments on that, Dr. Kang?
Well, that's just another example of where this meddling actually creates more issues than it tries to solve, and those types of situations, examples of that abound. Um, so my view is much more libertarian and much more laissez-faire, uh, and allows these different systems to be dynamic all to themselves, so you don't create moral hazard or any of these other issues that have been created by the government.
Yeah, I mean that's my thought. So I mean it's just an opinion anyways. It doesn't really matter. It doesn't seem like our markets are really being affected by what's going on in Cyprus. But the precedent of banks just taking depositors' money, that's another thing. So uh, and whether that spreads to other banks or not, I think is just a open question. Not really anything that we have any insight on. CBI, is this a viable gap up, Dr. K?
Let's see.
Looks like it right now.
That would be a viable gap up, sure. I mean, it's a very tight pattern, and so the ATR is very low, and so that's clearly, by definition, a viable gap up. The earnings and sales are accelerating. Institutional sponsorship that's been dropping, but that's because of the industry group it's in, and it looks like this group, they're in building, heavy construction. Actually, the industry group over the many weeks has been holding basically in the top 30. So overall, it looks pretty good here, and is possibly actionable. Actually, I mean, the earnings line looks good. Everything looks pretty good on this one, and it's looking actually, I like it. It's not a huge. The relative strength isn't like we like over 95, but it's a good steady mover, and especially in this kind of market environment. So this is a possible one.
Yeah, and the simple way to handle the trade is just if you bought it here, then you would use the low of today at 60.55, about a buck lower, less than 2% lower as your stop. So that's pretty much that. But it would qualify. It looks like to me you're trading 209% above average right now, so that looks like it would qualify. Somebody asks, do you trade the ETFs? Any insight on how you handle these trades? Day swing would be great. No, we don't trade ETFs really on a short-term basis. I've traded some like the UVXY, but I've gone through that so many times. I think for the benefit of others, I think what you should do is go back and look at some of the old webinars last week's, the weeks before, I think the last 2 or 3 weeks actually, and you'll probably run across discussion of how I traded the UVXY. But I don't think for the most part trying to day trade ETFs is going to be all that profitable over the long run. I think the one thing about the UVXY that makes it attractive is that it does tend to have big moves if the market gets going one way or another. So there's a huge amount of leverage that works out maybe on an intraday basis. But I would say I'm not going to bore everybody with it's a rehash of that. And in general, we don't trade ETFs on a daily basis. Digital Globe, somebody asked, getting ready to break out of the cup with handle. I don't know. You'll have to call up the stock and ask it. But I would say you have a little bit of a pocket pivot move here off the 10-day moving average. I've liked this stock before, but what I don't like right now is with the merger with what is it, Global Eye or GOI or whatever it was. The earnings are going to be negative. You're looking at negative growth next quarter, I believe, and a loss of 40 cents. Now that's probably due to exceptional items or one-time charges or whatnot related to the merger, I guess. The stock's holding up pretty tight, so you have a pocket pivot type of move here off of the 50-day moving average. So maybe that means it is going to break out, but I can't tell you if it's going to. However, I suppose you could buy it on the basis of this pocket pivot bounce off the 50-day moving average using a violation of the 50-day line as a stop. NetSuite, you had a continuation pocket pivot yesterday, it looks like. It's a kind of a thin stock, but notice how it's been going up 5 weeks in a row and closing near the peak. So it looks like it wants to go higher. It's one stock that's been acting well. But it's a 20% grower, and next quarter they're looking for 3 cents, negative 49% earnings growth. That's one of the reasons I've shied away from this stock, and you notice how it's been pretty erratic in terms of this reversal here, but comes out of it again. So, but that's what it's doing objectively in terms of the price volume action. Western Digital, not really a stock that we care much for. You had this sort of a weird pocket pivot coming off the 50-day moving average, and then another one here coming up through the 10-day moving average. So if you like the stock a lot, I guess you could buy it on that basis. But it's been getting some upgrades, I guess. But it hasn't been one that I've really been looking at as having to buy. It's a little bit choppy as well. I think, we're looking at Seagate too, and we said we didn't really care much for this one, but you notice how you get this nice sort of a cup and handle breakup, but you have these gaps in the pattern, so to us it's a little bit suspicious. I also think the earnings are up 5% in the most recent quarter. It's not the sort of thing that we're looking for. However, you might notice that in this market, earnings growth hasn't been that much of a factor. Stocks have gone up even when they're only moving at 10% earnings growth. So someone asked, would you say that today is a reasonable add point to, that's Canadian Pacific CP? I would say only if you're going to get a pocket pivot. If it's on track, I guess, to exceed, let's see, 1, 2, 3, 4, 5, I guess this day here, which would be 690,303 shares. If this looks like it's ready for a pocket pivot, coming up off of the 10-day moving average and is breaking out of this tight little range. So I would say if you own the stock, you've been tight here on the weekly chart, and if it does issue a pocket pivot buy point here, I guess you'd go for it. 19% earnings growth. The rails have been doing pretty well, and I think a lot of the oil boom has had a lot to do with that, and a lot of them are building capacity. I know Union Pacific has. And it's that's also acting pretty well. So the rails have been an area of strength, even with pretty meager earnings growth. So 10% earnings growth on Union Pacific, and not the sort of thing we would necessarily go after. Someone asked, does a stock that trades in low volume for 10 days and then beats that volume slightly qualify as a pocket pivot? Or are you looking for strong volume at least one day so the PP has to show some strength? Well, if you read our books or you go on the website and search on pocket pivots, the definition of a pocket pivot is simply that the volume has to be higher than any down volume over the prior 10 days. It doesn't specify that it has to be a certain amount of volume. As long as it's higher than that, it qualifies. So, but it looks like that's somebody who isn't really familiar with any of our work. So I think you need to go back and buy our first book and read that. Somebody says, I'm putting my excess cash into physical gold and silver. Could be a smart move. I don't know, I already have a pretty large chunk there already, and you've got to keep some money around to pay your bills, because last I checked, you can't take any physical gold and silver to the grocery store and pay for your groceries. Was up 13% on Google at one point, now leaking lower, bought earnings gap out. Can you point any sell signals that I missed? Yes. The initial sell signal was the fact that you had this gap up move and it could not hold. The second one to me was that it could not hold the 10-day moving average. And I think once it started to falter there, now you're looking at the 50-day moving average as your area of support. And maybe all it does is after this up move here, remember, you've been in a long move straight up almost off the 200-day moving average since November. So for it to pull back to the 10-week line, it may be at support right here. Maybe this is where it stops going down. But I think for my money, looking at this viable gap up on big volume, I would have expected the stock to hold this low. And when it didn't do that, I would have backed away, at least on any of the stock that I bought, up in here. And of course, now that it broke down below 800, that would have been your century mark rule, where you get through 800 and then you move up quickly through it, as Livermore used to look for with his century mark rule, where you're looking at a stock that goes through a 100 level, a multiple of 100, a century mark, so to speak. So 800 would be a century mark. And once it gets through it, it should move through it rather quickly. So it started doing that, and once it started to fail, I think, on this viable gap up, it could have been sold. But it's not all that black and white. It really depends on your objectives for the trade. Here is a viable gap up way down here back in January, and the stock's gone higher since then. But if you had bought that, then you would be using that low as your stop, and if you're in it, you're still in the stock here, probably now using the 50-day moving average as your selling guide, I think. Now, was this thing, Dr. K, was this thing holding above the 10-week? After this buy point here, let's see, we got 1, 2, 3, I hope I'm counting this right, 4, 5, 6, 7. It looks like it just barely made 7 weeks, so the violation of the 10-day moving average would have pushed you out.
But yeah, I mean that close is basically at the 10-day, based on the context of the chart. So
right.
It would have violated the 10-day at the top there, and yeah,
right.
6, 7.
What is GRFS? Somebody's mentioned Grifols, medical systems maker in where is this located? In Spain. Oh God, I wouldn't buy any Spanish stocks, but 667%, 667% earnings growth in the most recent quarter. Stock showing some weird action here.
That's an unusual. It's flagged though, so that's an unusual quarter.
Yeah, I don't know. I wouldn't. It's not one I would own myself. It's kind of sloppy. It looks like to me. You have a lot of these shakeouts in it. And it barely trades any volume. It trades 390,000 shares a day, so it's pretty thin. Keep going. Somebody says, if this is not a recession in northern Indiana, then I want to see one, meaning that things are not so hot in northern Indiana. I would say around here in Los Angeles is still a similar situation. I know people who are still out of work for the last 3 years. Of course, they're no longer counted in the unemployment rate, but I do know that they would love to go back to work if they could find a job. But they can't, and so yeah, I don't think the economy. You hear these guys go up on TV and say, "Oh, the market's great, the economy's growing, it's recovering," but it's not. I actually think you're still in negative GDP growth land, and if you go to shadowstats.com, I think I believe it's John Malden. He does a great job of exposing how these numbers are manufactured. So. ULTA looks shortable on light volume bounce. It is a light volume bounce. You just got to figure out where you can short it. At the 20-day moving average here, this is a simple moving average, I believe. Yeah, and it may fill a gap in here somewhere. I don't know, but it's drifting higher, so it's tough to short. But if you look at it here, we were running into potential resistance at around the 82 level. So you're getting 82, 83 level in here. You're getting close to potential resistance in here. And it may need to go a little bit higher. It tends to be a squirrely stock, but you can see the last time it broke here, you had 3 weeks up, and then it stalled out at this low here, and it rolled over, so maybe it does the same thing here. REGN, is this too sloppy to consider? I don't know. I've given up on this stock, although you notice it on the weekly chart, it is going tight for the last several weeks, so it may be setting up to go higher. It's a possibility. Other biotechs have been acting well. I'm noting that Celgene is moving higher as we speak. Let's take a look here. Celgene, yeah, actually 115.97 up 273 right now. So you're seeing some biotechs move higher. Biogen also has continued higher on a gap up, and I'm not sure if that's a viable gap up. This would have been a continuation pocket pivot, I suppose. But you're seeing the biotechs spring to life. So it's possible that Regeneron could.
It's looking all right.
Could be viable. I think it looks better on the weekly. I like the tight action along the 10-week line, so it could be viable.
And, the sales have, of course, been absolutely stellar. And actually, if you look back at that pink spike on the 15th, that was basically an even close. So I would not take that as a day of distribution. Therefore, essentially, REGN's got a pocket pivot right now as we speak.
Is it going to exceed this day right here? So you don't count that as a...
I wouldn't count that. That's not a distribution day. So it doesn't need to hurdle. It only needs to... The highest pink spike really is on the 21st.
Right, gotcha. Here's a question for you. There have been some recent forecasts for the euro to move to the 119 to 122 level over the next 12 months. How do you look at the factor that would play in the U.S. market versus euro markets should that happen? I guess that means the euro moving lower, Dr. K.
Yeah, I mean, I don't really look at currencies just because there's so many other, there's chaos theory involved, and as far as, making money in the markets, I don't really find looking at the movements, the subtle movements between these currencies to be very helpful. So it's not something I'm really even, I'm trying not to cloud my mind with things like that are not necessary.
Right.
Euro wants to move lower, the U.S. dollar moves higher. That then you've got situations where, precious metals, it'll put a damper on precious metals. It'll keep gold and silver in their basing patterns, basic things like that. But until it happens, as it happens in real time, you'll see this play out, and you'll see gold and silver continue on in their basing patterns.
Right.
Likewise, if the U.S. dollar were to weaken substantially, and those reasons could be, we're talking, many different reasons that could happen. But when it happens, or as it happens, then you'll start to see gold and silver possibly get stronger. And then, again, it'll come all back to the chart pattern and the price volume action therein.
Let's look at the euro. It's just continuing lower. Looks pretty ugly. Boy, that looks really ugly. Heading for the lows here back in November, I believe that is. Wow. Somebody asked on FBHS, which is Fortune Brands Home and Security, Dr. K, can you confirm my take that the 7-week rule is in effect on FBHS? Started buying in mid-20s.
Yeah, well, the 7-week rule, it looks to me like you would be using a violation of really the 10-day as your sell world. Because, yeah, that's pretty simple.
Yeah, the 7-week rule is in effect for, well, the 7-week rule isn't something that can ever be in effect. So using the 10-day moving average would be in effect based on the 7-week rule. So somebody asked me, do you always set your stop at the day's low for a pocket pivot? Thanks. Well, if I go in real heavy, yeah. If I don't, and then maybe I want to add, if I see it pull back a little bit, no. So, but in general, if I go in heavy, yeah. Is Amazon shortable here under the 50-day moving average? Well, it's stopping at the 50-day moving average, so, if you think this is a breakdown, and this is what the stock looks like on a weekly chart, here's a cup with handle that breaks out, and now you're failing on the breakdown through the 50-day moving average. If you think the stock is in trouble here, then, of course, you would short it right here using either the high of the day at 267.37 or just the 50-day as your stop, I think, as a quick stop, so if you wanted to short it. But that looks potentially like that would be your short sale spot. Notice how you did when you broke down, you undercut these other previous lows here, and that sets up the rally back into the 50-day moving average. I've actually been watching this, and even yesterday I put out a little bit on the short side, but I just covered it because it didn't seem to be giving up, and the market was finding support yesterday, so it moves a little higher today. Yeah, it looks like it might be in position to tag on the short side. So. Day trading ETFs, someone says, is much more difficult than trading futures. I would say if you wanted to day trade ETFs, index ETFs, then you're probably better off trading the futures, and I know a number of guys who do that. So you probably do that, right, Dave? That's who made that comment. Dr. K, you listening?
Yeah.
I hear you typing over there. You must be multitasking, as always.
I am.
But,
I'm actually putting out something. I liked REGN enough, actually, that I think it deserves a report.
Oh, okay, good. All right. Dr. K, do you have any rules regarding ceasing trading completely in a choppy market such as this one to avoid compounding small losses and the psychological pitfalls of trying to recoup those losses in an uncooperative market? But speaking for myself, I just love to beat my head against the wall just repeatedly until I'm knocked senseless, and once I become unconscious, then I stop trading. Dr. K, what's your technique?
Well, I've always said that waiting for the window of opportunity is really the best way to trade. Livermore talked about that. The man in the mountains, he only comes down and trades when he clearly sees opportunity. And that means that you would have only traded the last few months of 2006, and you would have only traded, well, there really haven't been too many windows. There have only been very brief windows of opportunity where leaders were clearly showing evidence of leading the way. I mean, 2009, 2010 were certainly markets that were going higher, but they were led by junk off the bottom stocks. So I haven't really seen a clean window of opportunity. I'm fond of saying the last time we saw a clean window was really in late 2006. But then, this has also been some of the most challenging markets. So if you look at 2008, that was not a good market to be playing on the long side. 2009 to 2010, that was very difficult as well, simply because it was unusual. Most of the tried and true indicators went out the window with quantitative easing. And 2011 to 2012 2012 have been two of the toughest years back to back in the history of the NASDAQ because they've been go nowhere trendless environments. So you'd been actually better off just sitting on your cash in 2006, taking your profits toward the end of 2006 and just doing nothing. I don't see anything wrong with that. I think people have generally lost money, especially, I mean, 2008 was disastrous for many people, unless you, and again, if you're playing the short side, then it doesn't apply to this question. But if you're looking for windows of opportunity on the long side, that's, to be very clear, we're talking on the long side, then really the last time was in late 2006. But that said, we all like to trade. We all try to figure out ways to beat the averages. And you know, certainly, you know, the market direction model had up to 2011 had managed to do well. 2012 was just a brutal market. I think it's the toughest year in my trading career. But that said, we'll see what the market offers going forward. As many famous traders have said, the market will always trend again. There will be new legitimate bull markets. It's just a matter of testing our patience right now.
Someone asked if Trinity Industries, TRN, is topping out. It doesn't look like it to me. I guess if you were looking at this on the basis of the 7-week rule, it's been following the 10-day moving average without violating it for a period of time. So you finally had a violation here, but the stock's back up above it. You know, I'm not so sure. I think looking at this on a weekly chart, what you can see here is there's support off the 10-week line here, and it's holding up. So I'm not so sure. I know that you have this 10-day moving average violation. You might sell it, but it is a sort of a slower stock. It's a rail car maker, I believe, and it's acting okay. But you do have a light volume move back up to the highs. Dr. K, how would you handle this?
Well, it's you know, if you had bought it earlier, you would have been out of it because it violates a 10-day, and then as far as getting back in, you would wait for a pocket pivot. Just,
right.
That's it.
So you're saying that it is a sell signal here?
Yeah.
Okay. So, I guess you could sell into the rise. But it may just, issue another buy point. So what you might do is decide that you're going to give a little bit of time, and maybe if it blows below these lows, then you're definitely out of it. But, Dr. K says if you want to remain uber disciplined on the basis of the 7-week rule, then you would be selling it. Somebody asked a good question. Why does a 7-week rule not have a volume component? A low volume violation is treated the same as a high volume violation. Can you answer that, Dr. K?
Sorry, say that again. Go ahead.
Why does the 7-week rule not have a volume component? A low volume violation is treated the same as a high volume violation. That's a great question, I think, actually.
Oh, yeah, no, it's just in my studies I found that if you try to include high and low volumes, it ends up costing you in the long run. Just simply because sometimes it's almost like you're looking at too much minutia, and if you simplify, you tend to get better results. And I learned that from O'Neill, and that all my econometric timing indicators that I kept trying and testing, they weren't working. They were, if anything, they were fouling up the model. They were adding complication where it wasn't necessary. I'd say the same thing about the 7-week rule.
Okay, fair enough. Amgen moving through 100. I don't think it's the first time Amgen has ever moved through 100, though. I gotta check that. Well, maybe I'm wrong there. Well, look at that thing go. And it's doing it on, what was the last quarter earnings? Well, 22% earnings on 11% sales growth. But moving through 100, so that's what it's doing. So if you're using the Livermore rule, I guess you could buy it here and look for it to keep going. But acting pretty well. But you notice you're taking up a number of the biotechs. I know this Gilead was doing the same thing, and you were extended here, so not a pocket pivot, continuation pocket pivot here, but I think you were, well, not really a long enough flag for a breakout, but these things are all moving higher. Biogen getting close to 200, so, but here you had a continuation pocket pivot. Price line looking shortable. Well, it is, because you have this, it's trying to form this big ugly cup, and you had a handle. I guess you just call this a base, and it's starting to break down. So I guess if it was a short, you'd be using the 695 level roughly at the 50-day moving average as a stop, maybe even the highs up here, but potentially shortable. But I'd probably be looking for that to occur if the market got into some trouble. with BIB, I'm assuming somebody's talking about this one. With Biogen, the fundamentals are such that what you had, is that right, or is it BIBB? Let me take a look here.
BIIB if you want Biogen, but the fundamentals are down. The earnings were down 7% in the most recent quarter, and sales are very anemic in the single digits, basically. So,
right, and so it's problematic trying to buy that stock. You know, I've had a hard time with it the whole way up, but yet it's continued to go higher. But that's a little bit of how this market is operated. But I think Biogen is more of a forward-looking story, and they just got another MS drug approved. I think it was yesterday, and that's what got this move going.
Yeah, it's a super cap among biotechs, so it tends to obey the 200-day because it's a slower-moving stock,
right?
With a relative strength of 84. So, you know, you could. I wouldn't buy it up here; it's extended, but you can play these if you don't mind the slowness of the stock. You can certainly be buying it maybe when it's getting support around the 50-day, and then every now and then it'll come all the way down to 200. So you play it, instead of using the 10 and the 50-day on faster stocks, you'll use the 50 and the 200-day on this.
Somebody asked, was yesterday a pocket pivot on Gilead? I'm not sure if I mentioned this. It's extended from the 10-day moving average. So here's the 10-day line right here. So you're starting from a point that's extended, so it would not be. It's a little bit too extended. It's moving higher, though, so the stock's acting well. But like I said, they're moving into all the biotechs today. Somebody asked, you have mentioned a few times about trading the UVXY. Do you trade the XIV in tandem? No.
Yeah, you can trade any of those vehicles as long as you know what 1x, 2x, inverse or normal.
Right.
They're all viable.
I just finished reading Reminiscences of a Stock Trader. Actually, it's Reminiscences of a Stock Operator by Edwin Lefevre. What do you recommend next? Well, if you haven't read our books, you can read those next. But if you're interested in more background on Jesse Livermore, you could read the other books. I think, what was the other one? Dr. K, How to Trade in Stocks was the one that he wrote.
It's a thin volume, but it's excellent. I would highly recommend that that book be read. It should be on my top 50 list in the top 5 or top 10.
Right.
Actually, I'm just checking right now to see if where that's at. It is at okay. It is in the top. Well, there's quite a few books. It's in the top 10, it looks like, but just at the very end of the top 10, because we've also got, of course, the Market Wizards books are great. Battle for Investment Survival, that was a classic written in 1935. Highly recommend that one. You can also read Trend Following by Michael Covell. That was excellent. I've sung this praises on that one a number of times. Also, my friend John Boyk wrote Lessons from the Greatest Stock Traders of All Time. And before I knew him, I ranked that number 6. So it wasn't like I was being biased. But I highly recommend that one as well.
Let's see. We're getting towards the end of the program here. So it's now 10:09 a.m. my time in L.A. Real quick question, though. Someone wants to know whether this day here on LinkedIn was a violation. Now, the low here is 171.39. And the next day it gets to 171.38. So that's a penny. You know, I think you're splitting hairs on that one.
Yeah, take it in context. Usually allow a dime. I mean, it's a bit arbitrary, but you know, if the stock is trading at 800, then you're going to allow more than a dime. You're going to allow 50 cents or something. But if it's trading at 18, then generally in the single digits, I allow a little bit of that porosity. So it's I see where IBD gets its dime idea. It's arbitrary, but it at least avoids situations like this.
Right, the 1 penny drop. So I think you would have to allow a little bit of room there. Usually, if it's only a penny, it's not even enough to notice on the screen if you're looking at your quotes. Someone asked, would you initiate new long positions given where we are in this current rally? I've been extremely hesitant to buy new positions in this market and keep waiting for some sort of correction. Well, we've been buying a couple of stocks. I mean, we just bought Splunk on this pocket pivot. We'll see if it works, but I don't see why you can't buy stocks if you really think that the stock has something to offer, and if the market continues higher, it may very well turn out to be a big leader. I mean, for example, one of the things I like about this is it reminds me of LinkedIn coming out of this long pattern after it IPO'd. A lot of smart institutions have been moving into it. So, but we'll take a position. But if it violates, say, the 10-day which is tried, and it doesn't do a very good job of holding it, but you'll notice that it really doesn't violate it throughout here. Here you might consider this a minor violation here, but here it doesn't. But if it started to break down, we just reverse out of the position. So if you're hesitant to buy new positions, then buy smaller positions, and just let it stop you out if it doesn't work. So you never want to operate from a position of fear. So if the stocks are showing buy points, then you can certainly consider them actionable. Doesn't mean they're going to work, and even if the market does continue higher, it doesn't mean they're going to work. We've seen stocks like NSM look like it's going to break out, and the market's been good all throughout 2013, at least from an index point of view, but they break down. So the stock, just because the market's in an extended position or not, I don't think I would really pay too much attention to that relative to what the stock itself is actually doing, because even if the market continues higher, a stock can still break down. So on that basis, you should be afraid of buying anything at any time, I suppose. But all you can do is, if you see something viable, you go ahead and take a position. Somebody says, how can REGN be a pocket pivot? Remember, this volume day, as Dr. K said, this volume day, he's actually considering that as more of an up day rather than a down day, because the stock basically closed off by, what was the low here, 171? Closed, and then
it closed down 0.05%, so basically it closes even.
Yeah,
and,
so so that's how.
It closes in the top half of its range as well. It's a tiny little range, but I wouldn't penalize that day. I wouldn't call it distribution, and I certainly wouldn't of interpreting price volume on indexes.
Someone asked about air leasing. Air leasing is forming a nice flag formation here. It's relatively tight. It's hanging along the 10-day moving average. So all you would do is, I think at this point you would be using a violation of the 10-day as your sell signal, but you might also be watching for another pocket pivot coming off the 10-day moving average. Only buy safe stocks, says somebody. What I need is a safe stock screen, basically. Just give me a list of stocks that are safe. I'm not sure what that is. All stocks are risky, aren't they? Isn't that what O'Neill says? And all stocks are bad unless they go up. In the webinar you held on a Sunday, due to technical issues on Friday, you showed a different screening tool. Can you share some information on the tool? Well, the tool I'm using is HGS Investor Software. And you can go to highgrowthstock.com if you want to check that out. I was actually on Sunday. I presented at their their biannual conference. They have it twice a year. Am I saying that right? Twice a year would be biannual.
Yes.
Or is that semi-annual? No, semi-annual would be every other year.
Oh, semi-annual.
It's a good thing I went to Stanford. Otherwise, I might know these things. It's $29.95 a month for HGS Investor Software. It's actually a great value, and there are going to be some changes, I'm understanding, where they're going to try and make it real time, and if they do that, I'm going to be very happy, because I think it's a great tool. I think it's a little esoteric, though, and they need to revamp the interface to make it more intuitive. That's my thinking. So hopefully, as these guys, Ian and George, and there's Jeff Scott also, I think, is getting involved in revamping the product. As these guys progress, we hope to give them some input on what we think would make it a very good real-time screening tool. So let's see. Dr. K, regarding the REGN discussion, what is your definition for distribution day of a stock with respect to pocket pivot down volume days? That's a mouthful. What is your definition for a distribution day of a stock?
Yeah. The distribution day, essentially, it's just, their classic distribution day is, down on higher volume. But then if, say, it had a very long tail and closed near the top of its range, you, on good volume, you wouldn't call that a distribution day anymore, because clearly it's getting a lot of support. And likewise, if you saw a very long, that's lower tail. If you saw a very long upper tail and it closes at the low, even if it's up slightly, that would be negative price action. So again, it's contextual to what the overall day has shown you. There was a day on REGN on the 11th of February Now, I would not call that a distribution day. It's got a long upper tail, and it closes near the low. But if you look, it's got the mini gap, and it held it, and it was up 2.7%. So
Which
that would
stock
be
are you looking at?
REGN on the 11th of February. So for instructive purposes, that to me would not be a distribution day, even though it's close to the low there.
Right. So basically weak action within the context of the overall chart on heavy volume.
And I'm trying to see some other examples, but there was one actually pulled up earlier, but I don't remember the stock since we've gone through so many. But yeah, that's the general idea. So yeah, keep it in compass.
So the pocket pivot, the highest on a pocket pivot, the highest down volume day must be a distribution day, not just any down volume day. You want to clarify that?
Well, it has to be. Yeah, I mean, it has to be the highest distribution day. What is considered a distribution day? In the case of RGN, the 15th of March is not considered a distribution day because the close is basically flat.
Right. So it's just to say that it would need to be, if it was down a little bit more, then that would probably be more of a distribution day. So a real down volume day.
In context with the
chart. Yeah, it's within context as well. So
if you have a slow chart, then you're gonna, again, if it's a smaller percentage is going to qualify as a distribution day. If the stock is down a smaller percentage as opposed to a more volatile pattern. And I mean, in this case, it's a very tight day as well. If it had a long tail, upper tail, and then was down 0.05%, that would be a distribution day because of the long tail. I mean, in fact, it could be up. It could be up, say, 0.1%, but with a long tail, that makes it more likely a distribution day.
Right. So, I mean, our recent book doesn't really talk about that because there are some exceptions, but they're very rare. And what we do when we see something like that, we explain it in a pocket pivot report that we send out to you guys. Somebody asked a question, I think this is a good one. How can anyone justify the double in DEC and WHR? I guess, what's WHR? Whirlpool, right? Which, look at that, double there. Deckers coming off the lows. How can anyone justify these moves given the puny sales growth out over the past 2 years? Well, I think that's part of what this market has been about, is you're seeing stocks moving, negative 13% earnings growth in DEC the last quarter, 2% sales growth. They're going to lose money next quarter, but they're driving the stock higher and it's gapping up. And that's kind of been how this market is. It almost seems like a QE market, like they're just taking everything up. Maybe they're anticipating hyperinflation. So I personally think you're going to see inflation, even though the Fed says that there isn't any inflation, there isn't going to be any, and blah, blah, blah. I think next year you can look for some hyperinflation or some pretty strong inflation starting to pop up, and then all hell will break loose. But that could essentially turn out to take the market higher as stocks adjust in nominal terms. Let's see, I think that's pretty much all the questions you have for today. So, I'm just probably going to take a nap for the rest of the day. Some stocks are moving up. Most everything is running up and down, depending on what's going on. It seems like the biotechs are the most exciting movers today. But other than that, it's kind of a slow day, and I would expect that you're just going to hold around here going into the close, and then we'll see what happens next week. And as we start the new quarter. So I don't really have anything else to add. So somebody asked, why is Dr. K in London? Because he likes it there, I guess,
Yeah, sometimes I like parts of Europe, and have broadband, we'll travel. So, and actually I'd have to say, well, I've got family out here, but I also have so many friends who actually moved into the city because I'm here, and it's just over the, I've been here since 2006 off and on, so it's great because now it's sort of like my extended family is not just in LA but also here in London.
Yeah, and I think he's lived in South Africa as well as Switzerland, but other than liking it, I know there's been some BS out there that Dr. K fled the country, which is a pile of crap because I thought that was really
I'm trying to
there are some real jackasses out there.
I can't get back to Galaxy 124. So anyway.
Right, exactly. That's pretty much it. But there are jackasses out there who want to make up stuff. And
well, they used to say. I remember there's been a number of rumors about O'Neill that he went bankrupt like 4 or 5 times in his trading career. And having worked there and been his right-hand guy on so many things, we both know that's just ludicrous, because we've known the ebbs, the flow of the company. And I mean, if that were true, the company would cease to have existed. There'd be a lot of news accounts on it as well.
Right,
So,
exactly. But that was in the 70s, so there were a couple of times when the company was having trouble because of the difficult period in the 1970s. And I know that a couple of institutional guys who had stock in the company bailed out, and I know there was some bitterness between Bill and those guys later on, because Bill resented the fact that these guys all bailed out on him and cashed in their stock and made him pony up cash during a time when the company was in hard times. But they got through that, and so no, Neil never went bankrupt. But people like to just put BS out there. I guess they have nothing else to do with their pathetic lives. But I just think it's funny that someone would try to say that you fled the country when you are the principal of an SEC-registered firm in the United States. So,
yeah, that's weird. People
Anyway.
have very creative minds, and I guess the Money Show doesn't mind that I fled the country, because they invite me back every time.
Right, and you come back soon, but nobody arrests you at the airport. So I don't know, Sky, you're asking a lot of stupid questions like, is he on the lam? He's on the lam. No, come on, get a clue, please. And stop listening to the BS that you read from self-hating and just hateful jackasses out there on the internet. So anyway.
Actually, I've changed my identity. That's why everyone calls me Dr. K.
That's right. And you've even got a haircut too. Anyways, on that note, you guys, that's pretty much it for today. So try to stay awake for the rest of the day, and we'll see what shakes next week. So that's all I have. We'll talk to you guys next week. Take care. Have a good long weekend.
So long, everyone.